If you were born before January 2nd, 1961, and you do not file the right IRS forms before the April 2027 deadline, you could lose more than $10,000 in tax deductions, credits, and penalty waivers that are sitting right there with your name on them. Most seniors have no idea these 5 forms exist. Their own tax software doesn't always ask about them, and the money you lose forever. I'm June, and you're watching Retirement Tax and Law Pro. For the next 30 minutes, I'm going to walk you through the exact 5 IRS forms designed specifically for Americans 65 and older. I'll tell you what each form does, how much money it puts back in your pocket, and the 3 simple steps you need to take this week so you don't leave a single dollar on the table. These forms are new. Some of them changed in 2025. One of them was just created by Congress last year, and most preparers haven't even seen it yet. So please stay with me, because if you stop watching now, you might be the senior who hands the IRS thousands of dollars that legally belong to you. And stay with me until step 3 of the action plan, because that's where I'll show you the one mistake that even careful, organized seniors still make. It's the mistake that turns a small oversight into a $5,000 penalty from the IRS. I'll show you exactly how to avoid it. Let's get started. Let me tell you about Margaret. Margaret is 68 years old. She lives in a small house in Tampa, Florida. Her husband passed away 3 years ago. She worked 31 years as a registered nurse at a hospital in Sarasota, and she retired at 65. Today she lives on her Social Security check of about $2,100 a month, a small pension from the hospital of about $1,400 a month, and required withdrawals from the 401k she rolled into an IRA when she retired. Margaret is careful. She pays her bills on time. She uses the same tax software she's used since her husband was alive, the kind you buy at the office supply store every January. Last year, she filed her tax return the same way she always does. Standard deduction, plug in the numbers, hit submit. Margaret did everything right. She followed all the rules she knew about. But Margaret made one assumption. She assumed her tax software would automatically apply every deduction she was entitled to as a senior. It did not. The software version she bought was the prior year's version. It never asked her about Schedule 1A. It never prompted her about the new $6,000 enhanced senior deduction that Congress passed in 2025. And because she has a small pension, it never reminded her to update her Form W-4P with the hospital's pension administrator. Here's what that cost Margaret in a single year. She missed the $6,000 bonus deduction. At her tax bracket, that was about $1,300 in real tax money. She had the wrong withholding on her pension, so when April came, she got hit with a surprise tax bill plus an underpayment penalty of about $400. And the worst part, she forgot to take part of her required minimum distribution from her IRA, the mandatory withdrawal the IRS makes you take starting at age 73. That missed amount was about $8,000. The penalty? 25%. $2,000 gone. When you add it up, Margaret lost more than $3,700 on her federal taxes in 1 year. And if she had skipped the new Schedule 1A for 2 or 3 years in a row before she caught it, she could easily have lost $10,000 or more. The most painful part? It was completely avoidable. Every single one of those losses came from forms the IRS publishes for free on their own website. And Margaret is not alone. According to the IRS's own 2026 filing season guidance, roughly 51 million Americans aged 65 and older are eligible for the new senior deduction. The Bipartisan Policy Center estimates that millions of them will fail to claim it in the first year simply because they don't know Schedule 1A exists. AARP's Tax Aid program, which prepares over 1 million senior returns each year, says the number one error they fix is incorrect pension withholding on Form W-4P. So let's make sure you're not the next Margaret. Now I'm going to walk you through the 5 IRS forms every senior should know about. I'll explain what each one does in plain English, how much money it's worth, and what you need to do about it. Here's what the IRS actually says about the first form. The IRS, in its own 2026 filing season updates for seniors, describes a brand new schedule called Schedule 1A, titled Additional Deductions. It was created by the One Big Beautiful Bill Act, which Congress passed and the President signed in 2025. The official IRS language says, and I quote, For tax years 2025 through 2028, taxpayers who are age 65 or older may be eligible to claim an additional $6,000 deduction per person, $12,000 if married filing jointly and both spouses are eligible. In plain English, that means this. If you are 65 or older by the end of 2025, which is everyone born before January 2nd, 1961, you can subtract another $6,000 from your taxable income, on top of every other deduction you already get. If you're married and both of you are 65, that's $12,000. It doesn't matter whether you take the standard deduction or itemize. You get this deduction either way. There is one income limit you need to know. The deduction starts phasing out if your modified adjusted gross income is over $75,000 as a single filer or $150,000 as a married couple filing jointly. Above those amounts, the deduction gradually shrinks until it disappears. Now, here's the part that most people, including a lot of financial advisors, get completely wrong. This new $6,000 deduction is available even if you take the standard deduction and even if you itemize. You don't have to pick one. You get the bonus deduction on top of whichever you choose. This is the single most misunderstood part of the new tax law. Most seniors I talk to assume that a new deduction means they have to start itemizing, keeping receipts, tracking charitable gifts, all that paperwork. They don't. The IRS's own Schedule 1A guidance page says it clearly, and I'm reading directly from the IRS website. It is available to eligible taxpayers who claim the standard deduction or itemize. Let me show you what this means in real numbers for tax year 2026. A married couple where both spouses are 65 or older can stack 3 deductions on top of each other. First, the regular standard deduction for married filing jointly, which is $32,200. Second, the extra age 65 standard deduction, which is $1,650 per spouse, so $3,300 total. And third, the new senior bonus deduction, which is $12,000 for both spouses combined. Add those up. $32,200 plus $3,300 plus $12,000. That equals $47,500. What that means is this. A retired couple living on $47,500 or less in taxable income in 2026 pays 0 federal income tax. Nothing. The IRS gets nothing. Yet most seniors still think they need to itemize to capture this. They don't. They just need to check the right boxes on Schedule 1A. And here's the truly counterintuitive part. This is the largest standard deduction stack in American tax history for seniors, but it expires after tax year 2028 unless Congress votes to extend it. You have a 4-year window, 2025, 2026, 2027, and 2028. Seniors who fail to claim it during that window lose access to it forever. What should you do because of this? When you file your 2025 tax return, the one due by April 15, 2026, make sure your tax preparer or tax software includes Schedule 1A. If you don't see it, ask about it by name. Here's what the IRS says about the second form. Form 1040-SR is officially called the U.S. tax return for seniors. The 2025 Form 1040 instructions state, for 2025, you will use Form 1040, or if you were born before January 2nd, 1961, you have the option to use Form 1040-SR. In plain English, that means this. Form 1040-SR is exactly the same as the regular Form 1040. Same tax calculations, same lines, same refund. The only differences are that the print is bigger, easier to read, and there's a built-in standard deduction chart right on the form so you don't have to hunt for it in the instructions. It's the IRS's gift to anyone who's tired of squinting at tiny tax forms. You are not required to use Form 1040-SR. It's optional, but if you file a paper return or you want to double-check the numbers your tax preparer gave you, the 1040-SR is much friendlier on the eyes. What should you do because of this? If you file paper, ask for Form 1040-SR by name when you call the IRS or download it from irs.gov. Here's what the IRS says about the third form. Schedule R is officially called Credit for the Elderly or the Disabled. According to the IRS, It provides a tax credit for taxpayers age 65 or older, or for those retired on permanent and total disability and receiving taxable disability income. In plain English, that means this. If your income is low enough, the IRS will give you a credit, not just a deduction, but a credit of up to $7,500 off your tax bill. A credit is dollar for dollar. If you owe $2,000 in taxes and you qualify for a $2,000 credit, you owe zero. That's how powerful Schedule R is. Here's the catch. The income limits on Schedule R are very low, and they haven't been updated by Congress since 1983. Your adjusted gross income has to be roughly under $17,500 if you're single, or $25,000 if you're married, filing jointly. Because the limits are so low, Schedule R is one of the most underclaimed credits in the entire tax code. Millions of seniors who qualify never even hear about it. What should you do because of this? If you're living mainly on Social Security plus a small amount of other income, ask your tax preparer specifically about Schedule R, or use the free help I'll tell you about in just a minute. Here's what the IRS says about the fourth form. Form W-4P is officially called the Withholding Certificate for Periodic Pension or Annuity Payments. The IRS says you complete Form W-4P so your payer can withhold the correct amount of federal income tax from your periodic pension, annuity, or IRA payments. In plain English, that means this. Every month when your pension administrator or IRA custodian sends you a payment, they withhold money for federal taxes, but only if you tell them how much. Form W-4P is how you tell them. It's a one-page form. You fill it out, send it back to the company that pays your pension, and they adjust how much tax they hold back from each check. Here's why this matters. The IRS overhauled Form W-4P in 2022 and then updated it again for 2026. The old system was simple. You picked single or married and you put down a number of allowances. The new system asks you about your other income, your other jobs, your spouse's income, and so on. Most seniors filled out a W-4P back when they retired, sometimes 10 or 20 years ago, and they've never updated it. As a result, their pension administrator is using outdated instructions and either taking out too much money, which makes your monthly check too small, or too little, which gives you a surprise tax bill in April. According to AARP, the number one mistake their tax aid volunteers fix every year is incorrect Form W-4P withholding for retirees. What should you do because of this? Call your pension administrator and ask, when was the last W-4P you have on file for me? If it was filed before 2022, you need a new one. Here's what the IRS says about the fifth form. Form W-4V is called the Voluntary Withholding Request. The IRS says, if you receive any government payment shown below, you may use this form to ask the payer to withhold federal income tax. That includes Social Security benefits. In plain English, that means this. Social Security does not automatically withhold federal taxes from your monthly check. If you want them to, and most seniors should want them to, you have to file Form W-4V. You pick one of four flat percentages, 7%, 10%, 12%, or 22%. Social Security then takes that percentage out of your monthly check and sends it to the IRS for you, so you don't owe a big lump sum every April. You file Form W-4V with your local Social Security office, not with the IRS. The form is one page. The change usually takes effect within 1 or 2 payment cycles. If you skip this form and you have other income and like a pension, IRA withdrawals, or part-time work, there's a good chance part of your Social Security is taxable and you'll owe the IRS at filing time. That can come with an underpayment penalty of around 8% annualized interest on what you should have paid throughout the year. What should you do because of this? If you don't currently have federal tax withheld from your Social Security check, ask yourself this question. Am I going to owe taxes in April? If the answer is maybe or yes, file a Form W-4V. Now let me mention one bonus form that's not in the title but is just as important. Form 5329, called Additional Taxes on Qualified Plans, is the form you file if you missed a required minimum distribution. A required minimum distribution, or RMD, is the amount the IRS forces you to withdraw from your traditional IRA or 401k every year starting at age 73. If you skip it, even by accident, The penalty is 25% of the missed amount. On a $10,000 missed RMD, that's a $2,500 penalty. But here's the rescue. If you catch the mistake yourself and correct it within 2 years, the penalty drops from 25% to 10%. And if you file Form 5329 with the letters R-C, standing for Reasonable Cause, on line 54, and attach a brief letter explaining why you missed it, the IRS will often waive the penalty entirely. What should you do because of this? If you're 73 or older and you have a traditional IRA or 401k, put a reminder in your calendar for every November to make sure you've taken your RMD before December 31st. All right, if you take nothing else from this entire video, take these 3 steps. 3 steps, not 10, not 5. 3. Because 3 is what you can actually remember. Step 1. Call AARP Foundation Tax Aid at 1-888-227-7669 and book a free appointment. That number again is 1-8882-277-7669. AARP Tax Aid is a free IRS-certified tax preparation service for seniors. Their volunteers are trained in all 5 of the forms I just covered: Schedule 1A, Form 1040-SR, Schedule R, Form W4P, and Form W4V. They will sit down with you, look at your situation, and make sure you claim every single deduction you're entitled to. The service is 100% free, no catch, no sales pitch. The call takes about 10 minutes, and the appointment itself usually takes under an hour. If AARP Tax Aid is full in your area, you can also call the IRS's VITA program at 1-800-906-9887. Same idea. Free, certified, senior-friendly. Step 2. Go to irs.gov and download Publication 554, the IRS Tax Guide for Seniors. This is a free, plain English booklet, well, plainer than most IRS documents, that walks you through every form, every deduction, and every credit available to seniors. Just type Publication 554 into the search bar at irs.gov. Print it out or save it to your computer. Even if you have a tax preparer, this guide helps you ask the right questions. This takes about 5 minutes and it is completely free. Step 3. This is the one most people skip. Call your pension administrator this week and ask, "What date is the W4P you have on file for me?" If they tell you anything before 2022, ask them to send you a new Form W4P right away. While you're at it, log into your My Social Security account at ssa.gov or call 1-800-772-1213 and either confirm your W4V is on file or submit a new one. If you skip this step, you could be one of the millions of seniors with outdated withholding instructions. That means either too much money pulled out of your monthly checks all year long, money you needed, or worse, a surprise tax bill plus an underpayment penalty in April. Both are completely avoidable with one phone call this week. Before you leave, I want to hear from you. Drop a comment below and tell me, did you know about the new Schedule 1A and the $6,000 senior deduction before today? Just yes or no, one word. I read every single comment on this channel and I reply to as many as I possibly can. I especially want to hear from anyone who has already filed a 2025 return and noticed Schedule 1A wasn't included. Your story might help another viewer realize they need to amend their return and claim that refund. And if you have a parent, a sibling, a friend, a neighbor, or anyone in your life who is 65 or older, please share this video with them right now. I'm not asking for myself. I'm asking because this one video could put thousands of dollars back in their pocket. That share button is right below the video. Send it to one person today. If you are not subscribed to Retirement Tax and Law Pro yet, hit that red subscribe button and turn on the notification bell. We publish new videos every Tuesday and Friday covering exactly these kinds of rules: IRS tax updates for seniors, Social Security changes, Medicare protections, banking rules that protect older Americans, and travel rights for retirees. These rules change every single year, and you deserve a place where someone explains them honestly in plain English without trying to sell you anything. That is what we do here at Retirement Tax and Law Pro. In my next video, I'm covering the Social Security Overpayment Notice, the letter that goes out to nearly 1 million seniors every single year demanding repayment of benefits they thought were theirs to keep. Most people panic, pay it, and never realized they had the legal right to a full waiver using one simple form. I'll show you the form, the deadlines, and the exact words to use. Click right here to watch it next. Thank you for spending this time with me. Take care of yourself, and I'll see you in the next one.